Welcome to the ENSEK Gross Margin Reporting Series. I'm Rich Hill. I'm the Head of Products for Data and Reporting. I'm joined today by Jon Slade, ENSEK CEO.
Hi, Rich. Good to see you, and thanks for having me.
You're welcome. Can I ask you to put your CFO hat on today?
You can indeed.
Very good. If you consider what is foremost in the CFO's mind as you review the numbers a month end, what would you say the biggest areas of concern are for you?
Well, that's a big question, because I think being a CFO of an energy retail company is really complicated. Obviously, a highly regulated market, lots of data, fairly risky commodity market at times, which brings volatility and obviously challenge the kind of wholesale prices. But I think the one big area is unbilled, and the unbilled position on the balance sheet is of most concern, I would say, to most CFOs, yeah.
Yeah, I mean, difficult to quantify by its essence. Effectively, has to be some kind of estimate in the absence of any billing. So yeah, that can be quite a difficult one to nail down systematically across a multi-million meter portfolio for sure.
Absolutely. I think I guess, predates back to kind of days of when the market opened up and privatization. I think energy companies have been struggling this for the best part of 30 years because the mechanics of how the market operates and is structured. But yeah, ultimately, just to expand this for our listeners a little bit, at the point you acquire volume from the market and you're unable to bill that to your customer base, you end up with a liability on your balance sheet, which obviously is quite challenging to substantiate, difficult to explain through audit, and requires, I think, real expertise and discipline around how that's explained away to internal shareholders, stakeholders, and the regulator.
Yeah, and I think the challenge comes either way. You know, it's recognised as an asset that's unbillable ultimately in the worst case scenario, in which point you're looking at write-downs in the P&L, or perhaps even worse, it's not recognised as an asset in the first place because there's a level of prudence around what you can and can't recognise, or where your kind of risk appetite is, or tolerance for recognition of revenue that's not yet billed. So getting this right is really important.
Hugely, and it's probably one of the single biggest things that would cause, I think, on a monthly basis and a routine annual kind of audit process, a significant amount of, as I say, discipline and rigor to get to a good answer. And trying to move away from judgment is obviously critically important. But for an energy company, it's such a key, it's almost a byproduct of a set of other processes. And so it's really hard to kind of pin down and kind of unpack easily.
Yeah, but the quantum of this can run into billions of pounds for a large energy supplier, and the commitment and the pledge, I suppose, and the recognition of that is that it will convert to billing. So having up those follow-up processes and actually good billing discipline as a foundation for the business is key to that.
It's crucial. I think one of the things over many years we often thought about is if you had any other kind of retail organization where you were literally buying stock, you put it on the shelf, you put it into the front shop window, somebody comes along and buys it and pays for it. That's a fairly simple linear process. Energy is entirely different, and the way that the structure of the market works means that the exact topic we're talking about is very difficult to diagnose, and it's a huge number. You're quite right.
Yeah, agreed. So if we think about how margin reporting might have worked in the past, what do you think the key challenges were there?
If you think about the evolution of the energy sector since the market opened up many years ago, each retailer has a very different but similar setup. So you rely on disparate systems, different tools, different people, different teams to really try and run what is a data business ultimately. And so the challenges in the context of Unbilled become around how do you get an accurate and reliable view of that on a routine basis to drive financial reporting, month-end determination and opinion, and obviously, really importantly, operational processes that hang off the back of it. The challenges are how do you get that into one cohesive, unified view that drives that activity across financial and operational processes that is built from the lowest level of detail that you can really support and stand behind, and isn't reliant on manual processes, risk in processes, errors, manual intervention, and as I say, disparate systems and inputs that make it really abstract and quite difficult to pin down.
Yeah, I couldn't agree more. The margin equation has to factor in what's going on in industry central systems as well as what's happening in the supplier billing system. And it's only in the reconciliation and matching of those two systems that you can really understand what's going on, and more importantly, where you might be leaking margin. So being able to model that is no simple thing.
No, it's a huge undertaking. I think what we tend to see across the market becomes a very big sort of data engineering exercise. Obviously relies on key expertise and knowledge around those core processes, which are very much into the depth of kind of energy accounting in a complex energy supply market. But yeah, crucially important to bring that into a performant process across a large portfolio, as you say, to then bring the insight that's needed to drive decision making. Really big job.
Yeah. What do you think might be the trigger then for moving from perhaps a more traditional, maybe less data sophisticated method of modeling to trying to implement a full margin level, meter level, day level of grain?
Yeah, I mean, I think this is quite a complicated subject, and it won't be to any CFO across the market. It won't be something that they're not used to facing into. What I've tended to see across the market often is expertise deployed in-house or externally, relying on consultants, for example, to come in and solve a point-in-time problem or to stand behind a set of numbers. The challenge for an energy retailer is if you can't substantiate that liability that you rightly explained, Rich, on the balance sheet, you end up in writing that volume down, value down at the end of the financial year, which is a very painful declaration through audit. And it's therefore not acceptable to go through the same, year on year to do the same thing. You've got to do something different. And I think therefore the trigger becomes when that number becomes material and really difficult to explain internally and to shareholders, then the decision has to be to do something different that's much more data led, much more relies on a systematic approach rather than one that might be not repeatable. So something that's systematic, scalable, and really runs automatically in a month-end process to provide the level of output that's needed really quickly off the back of month-end to be able to make those interventions in a timely manner before it crystallizes and becomes a problem.
John, we talked about the unbilled and how important it is to be able to substantiate that and calculate it on a reliable, repeatable, defensible basis. When you've got that kind of modeling in place in your business, as a CFO, what else are you thinking are the possibilities you can do with that?
Great question. I think the foundation of sort of revenue recognition is key. So let's assume that's in place as a CFO, and I'm happy, and I know that I've got comfort in the whole kind of methodology and processes around it. I think that's when you move finance to an entirely different forward-looking place. So rather than being focused on month-end actuals and kind of rearview mirror and what's happened in the month or the year, I'm starting to think about how do I support my colleagues and some of my peers at executive level across the business to drive better decision making. So a couple of key examples, well, at least 2 or 3 key examples spring to mind. So when you've got that reliable data set that provides a real-time view of your portfolio at scale, you can use that for your upstream and trading market access processes. So most reliable view of your portfolio to support your commodity purchasing activities, for example. Secondly, I'd be very focused on the sort of commercial opportunity that exists by having a real-time gross margin view on a customer level. So where might I want to put new products and services into market? Which customers are attractive from a margin, accretive to margin, which allows me to put and be confident I can put new products and services into that customer from a cross-sell, upsell perspective. So that's really important. Or indeed, how may it play through to new products and tariffs that I might think about. The ability to drive operational performance from that same set of data is key. All too often, we've seen across the market for a number of years, as I mentioned earlier, Rich, the kind of discrete and differentiated set of data that supports both financial and operational processes. And what you've got to get to is one source of the truth that everyone can stand behind that drives both financial reporting and operational activity. And so the operational teams, when I talk about operational teams, I'm really thinking about those that interact with the industry from a back office, exception management perspective, maybe billing or settlements, but also how does that affect the customer? Because all those processes are loosely, broadly connected. And therefore, the output from you start with your base level revenue recognition, but actually that data then is used to support the identification of the corrections that are needed across the back office processes, maybe interactions with the suppliers that are impacting in the ability to bill a customer's account, or through third-party counterpart interactions through metering agents, etc. So I think real value in terms of driving that operational process and efficiency can come from the same data set, which is hugely powerful.
And maybe not enough has been made of this as a capability, but at the moment you've got reporting running monthly, but in between each of those events, you've got a continuous activity directed towards portfolio health and reducing or correcting margin leakage. Then you've got a discipline embedded within your business, and it's more than just a reporting cycle.
Yeah, there's a danger it becomes a point-in-time month-end exercise, and it should be a continuous evolution through the month because things change and move through the month, right? Meter reads come in, customers' bills get created, and so embedding that in the fabric of the organization is key. And I think really importantly, when you've got the ability to value that risk or that opportunity, then you can direct your teams operationally to the things that drive the biggest return. And therefore, what you will avoid doing is deploying too much operating cost into your back office operations to work on, remedying activity that actually is low value or it's too late, it's going to crystallize or whatever it might be. So just providing that much more pointed view of where you should direct your resources is crucially important.
Yeah, the valuation piece is key. A lot of operational teams might not necessarily have a prioritized list by value to work from, and it might be about hitting the SLA, the number of accounts, throughput, that sort of metric, rather than the actual value attributed to each of the instances.
Yeah, it probably, from what I've seen across the market, can often be a little bit unsophisticated. This thing's burning over here, or this thing's on fire. Let's throw some people at it, but actually without that kind of value lens, which is crucially important. And you want to have comfort, I think, particularly as a CFO, but also as an operational leader, that you're going to get a return on that investment.
So what we're really saying here is we're using unified modeling from an industry perspective, from a supplier billing perspective, to drive several high-level use cases across commercial, operations, finance, and audit type functions, all at the same time and all in a coherent way.
Exactly. And like if I'm sat there as CFO, I'm thinking about what does this deliver benefit? Well, it gives me surety around my unbilled position. Definitely provides me confidence around revenue recognition policies, as we talked about. I've got a customer level view of margin that can help my commercial colleagues think differently about the sort of contracts and products and tariffs we might put in the market. I can help my trading teams in terms of more accuracy around kind of what we need to buy from the market. And really importantly, as we've just touched on, I know from an operational standpoint, we've got the ability to deliver and focus our resources in the right way, which gives me an operating cost benefit if I get that right too. So there's multiple strands and kind of benefit delivery off the back of having that unified view. Yeah,
sounds like a great idea. More people should consider doing it.
I'd say, again, you go back to the first principles of an energy retail business is largely about the data. And I don't want to oversimplify this, but metering and billing and all the data that sits around that process basically becomes really compelling, I think, for any retailer to get that right. Quite a point of differentiation.
Great. Thanks so much for being with me today, Jon. It's been really insightful getting your take as a CFO on our gross margin reporting capability. Thanks to the audience listening and watching, and watch out for more in the series of ENSEK gross margin reporting.
Thanks, Rich. Thanks for having me.